Welcome to Plato's Cave for our December 24, 2014 broadcast. My name is Doris Motormouth and I am your Poseidon news anchor. Fewest Americans in 7 weeks file jobless benefit claims. Bloomberg. Fewer Americans than forecast filed applications for unemployment benefits last week, a sign the job market is making progress as the year ends. Jobless claims dropped by 9,000 to 280,000 in the week ended December 20, the fewest since early November, from 289,000 in the prior period, a Labor Department report showed today in Washington. The median forecast of 47 economists surveyed by Bloomberg called for 290,000. No states estimated data and there was nothing unusual in the report, a spokesman said as the figures were released. Rising demand is encouraging businesses to hold the line on dismissals and take on more workers. Better job prospects and cheaper fuel costs signal consumer spending, the biggest part of the economy, will provide another boost to the expansion this quarter following growth from July through September that was the strongest in more than a decade. This is hinting at ongoing improvement in the labor market, said Gennady Goldberg, a U.S. strategist at TD Securities USA LLC in New York, who correctly projected the drop in claims. The lack of dismissals allows hiring to better translate into a decline in the unemployment rate. Stock index futures held earlier gains after the report. The contract on the Standard & Poor's 500 index maturing in March climbed 0.1% to 2081.3 at 8:35 a.m. in New York. Survey results. Economists' estimates in the Bloomberg survey ranged from claims of 275,000 to 300,000. The previous week's figure was unrevised. The 4-week moving average, a less volatile measure than the weekly figures, declined to 290,250 last week from 298,750. The number of people continuing to receive jobless benefits climbed by 25,000 to 2.4 million inches the week ended December 13. The unemployment rate among people eligible for benefits held at 1.8%. These data are reported with a 1-week lag. Initial jobless claims reflect weekly firings and typically decline before job growth accelerates. Gross domestic product grew at a 5% annual rate in the third quarter, the biggest advance since 2003, revised figures from the Commerce Department showed yesterday. Household purchases, which account for almost 70% of the economy, rose at a 3.2% annual pace and contributed 2.2 percentage points to growth. Demand for labor continues to expand. The economy has added 2.65 million workers to payroll so far this year, the biggest annual gain since 1999. The jobless rate in November held at 5.8%, the lowest since 2008. Payroll gains. Recent reports show the improvement in the job market is broad-based across the nation. Payrolls rose in 37 states in November from Vermont to Hawaii and the unemployment rate fell in 41, according to data on state employment. Some companies are trimming labor expenses. The New York Times will fire 21 union employees starting December 16, according to the union, exceeding the total job cuts the newspaper publisher had originally said were needed to reduce costs. New York Times Company had accepted the buyout applications of 57 union employees and almost 30 non-union workers, the New York Times unit of the Newspaper Guild of New York said in a statement on its website. The union said it didn't know how many non-union employees may be fired. Gold assets in biggest bullion ETF tumble most since 2013. Bloomberg. Investors in the world's biggest exchange-traded product backed by bullion sold the most gold in 18 months as the U.S. economic recovery cut demand for a haven. Holdings in the SPDR Gold Trust fell 1.6% yesterday to 712.9 metric tons, the biggest drop since June 2013. Assets declined to the smallest since September 2008. Bullion for immediate delivery is heading for the first back-to-back annual decline since 2000. A collapse in oil prices is curbing demand for the metal as an inflation hedge, while the Federal Reserve is moving closer to increasing interest rates. Gains for the dollar and U.S. equities have also made gold less attractive as an alternative asset. You've got all these factors conspiring against gold, Michael Cagino, president and fund manager at Permanent Portfolio Family of Funds Incorporated who helps oversee $7 billion, said in a telephone interview. A certain number of investors are throwing in the towel, Spot gold slid 0.2% to $1,174.42 an ounce at 10:19 a.m. in New York today. Prices fell 2.3% this year after a 28% plunge in 2013, the most since 1981. The U.S. economy expanded at a 5% annualized rate in the third quarter, the biggest advance in 11 years, government figures showed yesterday. Fed officials last week dropped a pledge to keep borrowing costs near 0% for a considerable time, replacing it with a promise to be patient, according to a statement. Value drops. The value of assets in the SPDR has dropped 13% to about $27 billion this year after slumping 57% in 2013, according to data compiled by Bloomberg. Holdings in gold-backed ETFs declined 8.7% to 1,609.3 tons after a 33% plunge last year, data compiled by Bloomberg show. Gold has held up pretty well considering other markets have been sold off pretty heavily, said Mark Pervin, head of industry economics and research at Australia and New Zealand Banking Group Limited in Melbourne. You haven't seen as much selling in ETFs. Although it's not recovering, it's certainly nothing like what we saw last year. Holdings in the SPDR Gold Trust, in which billionaire John Paulson is the biggest investor, have declined 11% this year after plunging 41% in 2013. While investors have been selling, some countries have bought gold after reducing holdings for about 2 decades from the late 1980s. Central banks globally will probably purchase 400 tons to 500 tons this year, the World Gold Council says. Russian reserves climbed for an 8th month in November to about 1,187.5 tons, the highest in at least 2 decades, according to International Monetary Fund data. Reallocation trade. Brent crude oil tumbled 46% in 2014 and West Texas Intermediate fell 42% as supplies climbed. The Bloomberg Commodity Index of 22 components dropped 15% to head for a 4th straight annual loss. While the stronger dollar has made gold less appealing for American buys, physical demand in India and China can help support prices, Cagino said. In the US, there's a reallocation trade happening with investors switching out of gold and into equities, he said. Yesterday's better-than-estimated report on the US economy sent benchmark stock gauges to record highs. The collapse in crude and the longest commodity slump in at least a generation means that instead of the surge in consumer prices that gold buys have been expecting for much of the past decade, the US is disinflating, according to Bill Gross, who used to run the world's biggest bond fund. Gold surged 70% from December 2008 to June 2011 as central banks increased money supply on an unprecedented scale, spurring concerns that inflation would accelerate. Bullion generally offers investors returns only through price gains. Greentown surges in Hong Kong on stake sale to building firm Bloomberg. Greentown China Holdings Limited, 3,900, whose chairman ended a share sale to a rival developer, surged the most in 2 years in Hong Kong after it agreed to sell 24% of the company to a state-owned construction group. The shares of Greentown, based in Hangzhou in eastern China, rose 21%, the most since June 2012, to close at HK$7.65. They resumed trading today after the stock was suspended on December 22. The shares had dropped 10% on December 19 when Greentown said the plan to sell a same-sized stake to Sunac China Holdings Limited, 1918, was terminated. Greentown, founded by Chairman Song Weiping, will sell the shares instead to China Communications Construction, 1,800, Group, the parent of the nation's biggest building firm, for $773 million, or $11.46 per share, an 81% premium to the closing price on December 19. The construction firm will become one of the 2 largest shareholders and Song's holding will drop to 10% from 22%. China Communications Construction may increase its stake in Greentown in the future, said China International Capital Corporation analysts Eric Zhang and Cheng Yang in a note. We do not rule out the possibility that it would eventually become Greentown's largest shareholder and turn Greentown into its real estate platform, they said, referring to the state-owned company. They have a buy rating on Greentown. Song had said he was wrong to sell a stake to Sunac as the 2 firms don't blend, paving the way for the termination of the agreement reached in May. China Communications Construction will get 2 out of 4 executive board seats, with one of them being a co-chairman role, according to an exchange filing today. Hong Kong's Wharf Holdings Limited, 4, which bought shares in Greentown in 2012, will continue to hold 24% of the Chinese developer, while Greentown Chief Executive Officer Xiao Bainian will have his stake cut by half to 8.1%. S&P 500 erases gain in final minutes after 5-day rally. Bloomberg, U.S. stocks were little changed as indexes erased gains in the final minutes of trading, after a 5-day rally in equities that sent the Dow, Indu, Jones Industrial Average above 18,000 for the first time. The Standard & Poor's 500 index fell less than 1 point to 2,081.88 at 1 p.m. in New York, wiping out an earlier gain of 0.3%. The Dow rose 6.04 points, or less than 0.1%, to 18,030.21. The Russell 2000 index of small-cap companies jumped 0.4%, briefly climbing above its previous closing record. The Nasdaq Biotechnology Index rebounded after a 2-day sell-off. The S&P 500, SPY, slid more than 3 points in the final 2 minutes of trading and the Dow lost about 25 points. Trading in S&P 500 companies was about 30% below the 30-day average for this time of day. U.S. equity markets closed at 1 p.m. for Christmas Eve, and will be shut tomorrow for the holiday. This week has seen the Dow go above 18,000, which is above and beyond the expectations of most in the face of the geopolitical turmoil we have faced this year, said Daniel Weston, Chief Investment Officer at AIM Capital GmbH in Munich. The Dow and S&P 500 closed at all-time highs yesterday after the biggest 5-day rally since 2011. The S&P 500 is up 0.7% in December, and has climbed 13% for the year. Stocks took off last week after the Federal Reserve said it will be patient on the timing of an interest rate increase. Markets rallied to records yesterday after data showed the world's largest economy expanded at the fastest pace in more than a decade. 2014 upheavals. U.S. equities had to overcome upheavals in 2014 that threatened to derail a bull market in its sixth year, ranging from violence in the Ukraine to an Ebola outbreak and a bear market in oil prices. Those obstacles were no match against the Fed and the economy. The Dow's worst retreat was only 7%, and the gauge recovered from each decline in about 2 months. Fewer Americans than forecast filed applications for unemployment benefits last week, a sign the U.S. job market is making progress as the year ends. Jobless claims dropped by 9,000 to 280,000 in the week ended December 20, the fewest since early November, from 289,000 in the prior period, the Labor Department report showed today. Last month, American employers hired more people than at any time in almost 3 years, and the breadth of industries adding jobs was the broadest since 1998. Bull market. The Dow has risen about 175% during the bull market that began in March 2009, propelled by better-than-estimated corporate results and 3 rounds of Fed bond purchases. The S&P 500 has more than tripled in that time. The Chicago Board Options Exchange S&P 500 Volatility Index, a measure better known as the VIX, dropped 2.9% to 14.37 today. The gauge has fallen 39% over 6 straight days, the biggest decline for that stretch of time since January 2013. Traders have added the most money on record to a popular exchange-traded fund tracking the S&P 500 since the Federal Reserve released its policy decision last week. The SPDR S&P 500 ETF Trust has absorbed more than $25 billion from December 17 to December 23, the biggest 5-day inflows in data going back to 2000. It's pretty remarkable to see what the market's done the last few days, Tobias Levkovich, Citigroup Incorporated's chief U.S. equity strategist in New York, said in an interview on Bloomberg Radio Surveillance with Tom Keene and Pim Fox. Some of it is the illiquidity environment of this time of year, and some of it relates to the path of last resistance being up at this point. Small caps. The Russell 2000 has shown resilience this year, recovering from a correction that saw it slip 11% over a 5-week period starting in early September. The index has surged 15% since reaching a 1-year low on October 13. Short interest in the iShares Russell 2000, an exchange-traded fund tracking the benchmark small company index, is the lowest in 17 months. Even with its 3.7% gain in 2014, the Russell still trails the S&P 500. The Dow has increased 8.8% year to date. 7 out of 10 major industries in the S&P 500 fell today. Energy shares had the biggest decline, losing 0.8% as oil prices tumbled. Utilities and healthcare companies gained more than 0.7%. The Nasdaq Biotechnology Index rebounded 1.6% after retreating 6.9% over 2 days, the most since April. Biotech rebound. Biotech shares had slumped as investors fear health insurers and companies that manage patients' drug benefits will put new pressure on how much the industry can charge for breakthrough treatments. The sell-off was prompted by Express Scripts Holding Co.'s announcement that it would block its U.S. patients from getting Gilead Sciences Incorporated's $1,100 a pill hepatitis C medicine. Gilead rallied 2.1% today after an 18% two-day slide. Celgene Corporation surged 3.3%, the most in the S&P 500, as it rebounded from a 9.4% drop over 2 days. Biogen Idec Incorporated jumped 1.5%. ExxonMobil Corporation dropped the most in the Dow today as oil futures slid more than 3%. Denbury Resources Incorporated, Apache Corporation and Transocean Limited tumbled more than 1.9%. Thank you for listening to Plato's Cave. See you tomorrow.